45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
Good evening, everybody. Thank you all so much for joining us tonight. We're going to be talking about some of our private lending options with you folks. We know how competitive the investment space is, and we want to make sure that we can offer you all the solutions from a financing aspect. So we're going to be diving in to a little bit more detail, and thank you so much for joining. So my name is Vince Tomich. I'm an advisor and agent here at Marshall Reddick. I also work on the lending team. I've been with the company now for coming up on 7 years, and I'm a huge fan of practicing what I preach. So as an employee, I'm also an investor. I've borrowed money, I've lent money, I have been on all sides of the transactions here. So I like to tap into some of those personal experiences to be able to share that with you folks that are working through life scenarios, to be able to offer more solutions. And I'm also here with my partner, Stephanie Miller.
Hi everyone, Stephanie Miller here. So excited to be with you tonight. Thanks for tuning in. I'm the private lending manager here at Marshall Reddick. I've been with the company for 9 years now. I started as a processor, moved into an underwriter. I've been a loan officer, more recently a manager in borrower business development. So spent a lot of time on the phone with borrowers. So would love to hear from each and every one of you after this call, answer any questions, go through scenarios. I'm here as a resource. Also believe in practicing what you preach, just like Vince, mortgage investor, mortgage fund investor. So truly believe in everything we do here at Marshall Reddick.
So for those of you that are not as familiar with us here at Marshall Reddick, in addition to private financing, we do offer real estate services for brokerage and property management. So just wanted to kind of touch on our scope here, right? So you see all of the cities that we have an actual physical footprint in. So Stephanie and I are located in our Newport Beach office, so we're here in Southern California, but we also have offices in Texas, Tennessee, and Florida. And you can see the cities that we have that brick and mortar office to support those that are in need for brokerage services and property management services.
We also lend in all of these markets, but we also, in addition to those markets, lend in all of the states that we have here up on the map. So we're in about a dozen different markets or states rather. If you're actively doing business or looking to do business in a state that isn't listed on the map, feel free to give one of us a call. We're happy to talk through the scenario and see if it's something that we can explore. We have done deals in other states in addition to what's on the map. So again, give us a call and we're happy to see if we can make something work for you.
Yeah, absolutely. So just to give you guys a quick rundown of the agenda today. So we're going to be talking about some of our private financing and the options that we can provide. We're going to go over traditional financing versus private financing and how those differ from each other and when to use one over the other. And then we're going to dive into our common sense approach to private financing. We're going to go over our flip and fix program, our fix and flip programs, the new construction, as well as some bridge loan scenarios. Go over the underwriting process, the draw process for those renovation loans, and then some frequently asked questions. So Marshall Reddick private financing, right? So what is kind of the main components of our financing? We don't have a ton of guidelines, but we do have some guidelines that we adhere to, right? So one of those being it's non-owner occupied only. So we can't help on any primary residence purchases. That would be more for a conventional loan. We do focus on residential real estate only. Now, when I say residential, we will explore some smaller to mid-sized multifamily, but we stay away from the office or retail space or, those kind of flex commercial spaces that you'll often see. And, in addition to, purchase loans, we'll do refinances and do cash out refinances as well. So there's oftentimes these scenarios that we run into constantly. And being able to leverage any one of those would be, oftentimes helpful for you folks. And then, of course, we have our non-recourse options for our self-directed retirement folks as well. So that's something that you can always tap into if you have one of those accounts.
Yeah, it's a huge value add in working with Marshall Reddick. Not a lot of lenders out there offer non-recourse loans. Non-recourse loans are required when you have a retirement account. It's an IRS thing, and so we're able to fill that gap for those investors who are utilizing their self-directed retirement accounts to purchase property. Also, just wanted to make a comment on the apartment buildings. So typically we do 1 to 4 units. However, we do, as Vince mentioned, small apartment buildings. We recently did a 20-unit apartment building. So, anything 4 to 20, 25 units we can accommodate. We're just not going to be the best lender for, those huge apartment buildings, 100 and 150 units and above.
Yeah, makes sense. So here's a helpful chart just to kind of weigh out and look at the differences between traditional financing and private financing. So for those of you that are familiar with traditional financing, I'm sure you've run into the scenario where they're looking at credit reports, income verification, tax returns, debt to income ratio, etc. Right? So some of the big benefits with using private lending is we don't have a hard credit pool. So that's something where the interest rate is not going to be tied to the credit pool, to a credit score that you have. There's also not going to be a verification of income or employment. We at Marshall Reddick in private financing are not as interested in you as the borrower at what you do for work and how much income you make. We're more focused on the property, how the property performs and the income the property generates, right? So different outlook. As far as tax returns, right? For those of you that are self-employed or in the, let's call it real estate industry where you're flipping properties, your tax returns may not be the most suitable for a conventional loan. So we're not going to need those. Also, debt to income ratio is oftentimes a problem for a lot of our folks. And it's mainly the conventional guidelines, right? It's not to say that we seek out folks or do loans for people that just don't qualify for conventional. So high DTI can come to us. It's more of a function of the specific loan programs, right? And then oftentimes an appraisal is not going to be needed. That's not always the case, but in many situations we don't need an appraisal, and that's going to really help with time and cost savings.
Yeah, absolutely. So we went over what isn't relevant here at Marshall Reddick when it comes to private financing. So what is? Borrower cash for down payment and reserves. So that's a big one, right? Vince mentioned that we're not as concerned with the borrower as we are the property that we're lending against. And so we do require the borrower to, have some skin in the game and bring in, some equity and down payment. We also care about the collateral property, right? That's the property that we're placing our lien against. And so we are concerned with the value, the location, making sure it's in a good zip code and a good school district, and making sure that you're purchasing it for a good deal, right? A lot of times, the people in the fix and flip space or savvy real estate investors are great at hunting deals. So we're really looking at, those value add properties who are, have definite equity in them. And then we're also looking at borrower background and experience. It's not a requirement for you to have real estate experience, but that's our quintessential borrower, someone who is in the space of fixing and flipping, in the space of, buying rental property, that type of thing. So we take a much different approach. We have our own guidelines, right? This is important because a lot of other private lenders out there nowadays are selling their loans to institutionalized end buyers. And so we hold all of our loans to term. We're a balance sheet lender. And so therefore we have our own guidelines. It doesn't mean we're, loosey-goosey and have no guidelines, right? It just means that we can be flexible and we take more of a common sense approach to our lending. Our program was built by investors for investors, right? We've all owned property. We've, fixed and flipped and built new construction. And so we really understand the space that we need to be in order to, serve the niche for those savvy real estate investors. We also take a no red tape approach, right? So some of those things that Vince went over in the previous slide. We're transparent and reliable. I can't tell you how many people I talk to on a weekly basis who tell me that their lender just straight up bait and switched them, right? They told them that their terms were going to be X and they ended up being Y. Or they told them that they were going to be able to close on time and then they ended up not being able to close on time. So that's just something you're not going to get with Marshall Reddick. We're going to tell you up front, hey, we can make this happen, or no, we can't. There's just no sense in, stringing you along and hoping for the best. We can also close super quickly, right? So our average time frame is 7 to 10 days. Of course, the more time, the better. We always appreciate more time. It, gives everyone flexibility and takes off stress off everyone. However, if you do need to do that quick close 7-10 days, we can accommodate. And that's really because we don't require that appraisal that Vince mentioned. So our loan programs are eligible for all kinds of niche borrowers, right? So we can lend to individuals. There's no entity required. That's big because a lot of other private money lenders will not lend to individuals. You have to use your entity. So if you're a borrower that's just looking to purchase real estate or get a loan in your personal name, we can absolutely help. We also lend to entities, right? And so if you are using an LLC or a corporation to purchase property, we don't necessarily offer or require rather a personal guarantee. So that's a big value add in working with us as well. We also do lend to foreign nationals. No visa is needed. So the two requirements for a foreign national is one, you either need to have an ITIN, that stands for International Tax Identification Number. So if you're a foreign national and you're borrowing in your individual name, you just have to have that ITIN. Alternatively, if you don't have an ITIN and you're looking to purchase real estate in an entity, we can also lend to you as long as it's a US LLC. So US LLC corporation, as long as you have a US established entity, we can help those foreign national borrowers. And then finally, we also have that non-recourse option, right? So the non-recourse option is only available for self-directed retirement accounts, right? So IRA LLCs, solo 401ks, but we do offer that to those retirement account borrowers.
Yeah, that's really helpful to detail. And just to kind of touch base on the types of loans that we offer. So our main bread and butter is as far as the loan options that we have are renovation loans, which are going to be your fix and flip loans, right? So those individuals, or for those of you that have heard of the BRRRR strategy, right? So those are going to be your individuals that are buying homes and fixing them up and either selling them, or you can refinance those, or renovate, refinance, and repeat that cycle, right? So that's the BRRRR strategy. So we're helping a ton of those folks, and those individuals are looking for our renovation services. And then we have a lot of people that also look for new construction, right? So if you already own land or you plan on purchasing land and you need the all the construction costs, that's something that we can help with. And then your bridge loans. So this is going to be a lot of times your individuals that are going to be, gap funding. So certain scenarios where you need quick closes. Like Stephanie said, we don't love to have to close in under 7 days, but we can, right? And those are oftentimes where we're rescuing kind of deals that maybe have gone sideways. Bridge loans come into play there, or people that are oftentimes trying to tap into their equity for other things. And we're going to actually go over these loan programs in more detail and break them down a little bit for you. And then we're going to also provide a few examples of recently closed deals so that you guys can think about scenarios that you may either come across or things that you're thinking about doing in the future.
Yeah, absolutely. And so how you access all of these different loan programs is by our website. You can either go to marshallreddick.com/loan programs, or you can just go to Marshall Reddick homepage, hover over borrow, and click loan programs. You can find all of our programs in live time at any time. So here I have the renovation rate sheet up. So you'll see that we have 4 different programs in our renovation program. So they're all going to be a 12-month term. However, we will consider a 6-month term for a lower origination fee. So that's great for those people who, are purchasing property that only need, say $10,000 worth of work, and they're going to, slap some lipstick on a pig renovation and put it back on the market. So we will do 6-month terms for a lower loan fee. Our interest rates range anywhere from 8.75 to 12%. I get asked this question a lot. What's the difference between rate and APR? The difference between rate and APR is rate is the actual interest rate that you're paying on the money that you borrow, whereas APR takes into account all of the loan fees, right? It just expresses it as a percentage over an annual basis so that you can see the more true cost of capital. All of our loans are interest only, right? So each month you're going to be paying interest on the loan, which means when you go to repay the loan, you simply owe the principal back. And our loan to value varies, right? So what constitutes the interest rate, I guess, is how much money you put down. So the more money you put down, the lower the interest rate. The less you put down, the higher the interest rate, as you can see on this chart. So, if you put 25% down, that's going to get you access to our lowest interest rate. And we will go up to as little as 10% down for the highest interest rate that we offer. It's important to note that in all of these cases, our loan is going to be capped at 70% of the after renovation value. So if 70% of the ARV gets you 90% of purchase and 100% of your renovation funds, great. If it gets you 85% of your purchase and 100% of your renovation funds, great. It really just depends on whatever after renovation value is and what 70% is of that number. We also have minimum down payments. So a big value add in working with Marshall Reddick as well is we don't have a minimum loan amount per se, right? A lot of other lenders out there have a minimum loan amount of $100,000 or $150,000. We will make lower loan amounts, right? Say 50, 60, 70,000. It's just we're going to have a minimum down payment. So in the event you're purchasing a property at 50,000, you're not going to expect to put, $500 or $7,500 down. You're going to expect to at least put $10,000 down. So our minimum down payments do apply in those lower purchase scenarios. And then, as we mentioned earlier, 7 to 10 days to close. So again, no appraisal needed. And so if you need us to, we can close within 7 to 10 days. And in all honesty, sometimes even quicker than that. So here I have one of our recently funded fix and flip deals. The big value add in this one was we closed in 7 days. I think we got the loan application on a Wednesday and closed and funded the loan the Wednesday thereafter. So this was a property in Greenwood, Indiana. The borrower was purchasing this property for $212,500. Our loan amount was $187,000. The renovation on this one was very light, only $7,000. So we were able to also finance that for the borrower. So you'll see our initial release was $180,000, and then we also financed that $7,000 for the borrower. So super good terms for him. Our next example here for a fix and flip deal is in Denison, Texas. The big value add in this one was 11.5% down. So the numbers worked out to where the borrower, had little skin in the game, if you will, or, that he was purchasing it under current market value enough for us to be able to give him high leverage. So he purchased this property for $172,500. We financed $162,000 of that. And then of that $162,000, we released $152,500 at closing, so roughly around 11.5% down. And then we also financed their $9,500 renovation budget. So another workable situation for this borrower. Our next loan program is our new construction. So we have two programs here. They're both 12-month terms. It is important to note, however, I know sometimes new construction can take a little bit longer than 12 months, right? You're at the mercy of the city and how quick they can get you your permits and inspections and all of that good stuff. So we will offer 6 to 12-month loan extension terms for new construction deals as well. So if you're, doing a larger project and need, 18 or 24 months, we can accommodate there. Our interest rates are extremely competitive, so 8.95 to 11.95, depending on how much you leverage. The payments are interest only, and then again, the amount that you borrow or percentage that you borrow is based on the interest rate. So we can do 85% of your construction budget for 8.95% interest. Otherwise, we can do 100% of your construction budget for 11.95% interest. Subject to 70% of the after construction value. So just like the renovation program, everything's going to be capped at 70% of the after construction value. The construction funds will be released in a reimbursement style fashion, right? So, we help you close the loan. We get you 100% of your construction costs. You go and get, say, the slab down or the foundation. You send us evidence that that's been done, and then we release the first draw. You take that money to get, the trusses and the framing done. We release the second draw, and so on and so forth. So that's how we structure our new construction loans in terms of a reimbursement style fashion. And then for our new construction loans, typically it takes about 2 to 3 weeks to close those. There's a little bit more that goes into those than the renovation loans, so still a very quick time frame in terms of 2 to 3 weeks. So next, I have a recent new construction deal that we did. This was in Guthrie, Oklahoma. So you can see that we financed just about 100% of their construction costs. Their construction cost was around $284,000, and we financed $267,500. Again, we released zero at closing, so the borrower came in with the funds needed to purchase the property, and then we gave them almost 100% of their construction budget. The second new construction deal is a little bit different. So this was a property in Fort Wayne, Indiana. The borrower already owned the property and he had already started the construction. So he got the construction to a point where the foundation was already down. So by the time we closed, we actually gave him money at closing to reimburse him for that first draw. So again, he purchased the land, he had started the construction, he got it to where the slab was poured, and then at closing we were able to release $50,000 to reimburse him for those upfront costs. He then took that $50,000 to get, the next phase of the construction done, and so on and so forth. So here's some real life examples of a couple new construction deals that we recently funded.
Yeah, this is definitely helpful to review and to go over because it allows to share actual scenarios that you might want to tap into. And what else is nice about what you were covering is while we have our guidelines and our rates to show on our website, the moral of the story here is that it's a common sense underwriting approach. So while we do have these guidelines, if there's deals that make sense and we have to make concessions in some points, we will, right? We're more interested in the overall larger picture, and there's other factors that weigh into this than just trying to fit into a box. And I think that's really where our value comes in, and all of our underwriting is done in-house. So there's the decision making is done here and with the team, and so I think sharing more information with us is helpful. So just to transition, our last loan program here that we're going to discuss is our bridge loan scenarios. So bridge loans, basically we have three different options here. So we have a 12-month term, which is at 9.95% interest only, and that is at an 80% loan to value. Our second option is the 36-month bridge loan, which is at a 8.95, and that is at a 70% loan to value. And then our last option is the 60-month term at 7.95, and that is at a 60% loan to value. So you'll see, those differences there. And one of the nice things is for our 12-month bridge loan, there is no interest guarantee or prepayment penalty, right? So these are folks oftentimes that need quick financing, and they can pay that loan off the following day. And there's no prepayment penalty or no interest guarantee. Now, as it relates to program 2 and 3, there are interest guarantees, meaning there's an amount of interest that you have to pay for regardless of the timeline that you hold that loan. So for example, in program 2, there's a 1-year interest guarantee. So meaning that if you were to hold the loan for 10 months, you have guaranteed 12 months of interest payments. So you would be subject to paying 2 more additional months of interest, even though you only held the loan for 10 months. And that logic would also be applicable for program 3, where we have a 2-year interest guarantee. So of the 5 years, 2-year interest guarantee. So something to consider when exploring bridge loans is really trying to understand that timing. Is it something that you're really trying to dispose of right away? Or is this a little bit of a longer hold where you're comfortable with that 1 to 2 year interest guarantee? In addition to that, we do offer the bridge loan options to non-recourse borrowers. Again, those are going to be your self-directed IRAs or solo 401ks. I myself have I have a solo 401k and leveraged a loan from Marshall Reddick. So that was something that did come in handy personally.
Yeah, and it's huge. I can't tell you how many clients I've talked to who never knew that they could take a loan out of their retirement account, and they historically purchased everything with cash, and now they're able to, use 50% leverage and purchase 2 properties. So it's really helped our IRA borrowers or retirement account borrowers.
Totally makes a huge difference. So this is a good example of a recent scenario that Stephanie and I worked on. We had a client who was actually in contract in Greenback, Tennessee. So what was going on is there's 3 parcels of land, and he had them all under contract, although he had a blanket loan on the entire 3 parcels. So the challenge was his existing lender would not do a partial release. This is something that we run into often. We often have people ask us if we will do blanket loans, and typically we don't. That's not something that we advertise or do often, but in this scenario, we did do a blanket loan because it was only for a really brief period of time. And what we were able to see is we were able to more easily and functionally do partial releases that were able to successfully get these sales done.
Yeah.
So that was something that came into in a very short window. The borrower called with like 6 or 7 days to close, and we were able to get that done.
I think even shorter than that.
Yeah.
I think it was like 3 or 4 days.
So that was something that was of interest, and something that, is one of those scenarios where there's no prepayment penalty. They held the loan for a couple of days to complete the sales, and everybody, was able to get out of that successfully.
Yeah, and that's where the common sense approach comes in, and how we can be flexible. Like Vince mentioned, we don't typically make blanket loans for exactly the same reason. It's dicey when it comes to unencumbering property, but as you can see on the screen, the loan, the loan to value was so low that, we were able to step in and save the day.
Yeah. and that borrower was definitely very happy with that. So here's another scenario where we actually have a longtime Marshall Reddick client who was interested in leveraging some of his existing equity for some other investments. So ultimately, he had a loan, an existing first position lien on the property for a small amount. We were able to absorb that first position lien and be able to get some equity for him. This, again, was a short-term loan. It was only for 12 months because he actually was going to be selling this down the road, this year. He didn't have an exact timeline, but it was irrelevant from a payoff standpoint for us. We were happy with any time within that year. So this was another good example of someone who can tap into that equity now.
Absolutely. A question I get asked a lot is, can I get a loan quote, right? I've heard all about your guys' different loan programs. I can, do the math on my own, but I really want to understand exactly what I'm getting into. And so therefore, can you give me a loan quote? The answer to that is absolutely, right? So all I need to do that, or Vince to do that, is a property address, a purchase price, the renovation cost, and estimated ARV. This is in the event of, renovation or new construction. We can also do it for a bridge loan as well if you're just straight purchasing something on a bridge loan. And we can also give a loan quote without a property address, but more times than not, someone will at least have a property in mind that we can kind of use as an example and massage the numbers based on, hypotheticals, right? You think your purchase price is going to be this, you think your renovation cost is going to be this, and we think the ARV is going to come in at this. So this is a great tool. If you ever need a loan quote or want to go over details in terms of what a deal would look like, feel free to give Vince and I a call. We'd be happy to go through that with you. We can also provide pre-approval letters, right? This is something that Vince and I are, sending out on a daily basis to borrowers. So in order to provide a pre-approval letter, we just need a copy of your most recent bank statement. We just want to see that you have sufficient funds in the bank to do the deal. We also need your entity docs, the loan type, the property address, and the offer price. The reason why we need this information and detailed information such as this is we're going to tailor the pre-approval letter to be for this specific property, right? It's going to be for the price that you're offering. You potentially might be willing to pay more for the property, or you might potentially be approved for more for the property, but we don't want to necessarily show the seller that you're approved for more. So we're going to do it property specific and offer price specific. I also provide, as well as Vince on his pre-approval letters, our contact information at the bottom. We encourage listing agents or sellers to give us a call. We're more than happy to run through, what the deal looks like, that you're approved, that we're going to be able to close quickly. And so we're just really going to sell either the listing agent or the seller on accepting your offer and instill confidence in them that we can get the deal done.
Yeah, absolutely. So then at that point, once we have a pre-approval out to you, and once you've been able to get a contract underway, we then, it sounds backwards, but then we kind of fill out the loan application, because at that point, it's more about gathering the data that we have from you. So we just took some screenshots here of where you can find how to complete the loan application online. In all reality, it'll either be myself or Stephanie that can assist with filling out the loan application, but you would go to our website, marshallreddick.com/borrow. You would go to the borrowing tab at the top and click on loan application. Then you'll be asked either private financing or conventional financing. Of course, we're going to be helping with private financing. And then it will prompt us to fill out a couple of other steps in phases through the process. So it'll be a purchase refinance, cash out refinance, and then there'll be some other loan terms that we're going to be going over, or that we'll be helping you decide on. And again, this is something that we can have a longer discussion about. And usually that's done prior to the loan application to understand exactly what loan program and what option makes the most sense for you.
Yeah, absolutely. We also know that real estate investors are typically in the field, right? So more times than not, we're inputting loan applications for borrowers over the phone. So while you're more than welcome to do this on your own and, can go to our website and do it, we're more than happy to do it for you over the phone. And that's typically what we do in more cases. So after we submit a loan application, the next part is going to be the underwriting process, right? So what exactly does the underwriting process mean? Well, it's essentially gathering of documents, right? So we're going to ask you for a purchase contract, the scope of work in the event it's a renovation or a new construction loan, photos. We're going to ask you for your best comps, right? Give us the best 2 or 3 comps that support your current market value, your after renovation value, so that we can submit those to underwriting for consideration and hopefully for them to use. We want your bank statement, your entity docs and driver's license, and then as well as your insurance and escrow agent contact information. We want these points of contact because we're going to reach out and facilitate everything on your behalf, right? So we're going to reach out to the insurance agent and say, hey, Mr. Insurance Agent, we need X, Y, and Z in terms of requirements for this insurance policy. And then same thing with escrow. We're going to reach out to escrow and really facilitate the entire transaction on your behalf. Once we gather all of those documents, we're going to assign you to what's called an investment analyst, right? So they're going to be the liaison between us, you, and underwriting. So they're going to get us through the process. They're going to make sure that they, ask any questions that underwriting has. They're going to ultimately make sure that we close on time, right? So if you need to close in 2 weeks from now, they're going to really make sure that everyone's doing what they're supposed to be doing in order for us to close on time. The next step from there is for underwriting to pull comps, right? We mentioned that a lot of cases we don't need an appraisal, and so we have a team of in-house underwriters who will pull those comps internally and therefore value property. So a lot of the underwriting process is us, really valuing your property, and then based on that value, we're structuring the loan within our guidelines and then issuing them to you as the borrower. Once you review those loan terms, we're more than happy to answer any questions, discuss, but assuming you say yes, let's move forward, that's when we would set up everything to close and really facilitate, with escrow and your insurance agent to make that happen. Once we're closed, right, in a renovation and new construction scenario, that's when you as the borrower are going to go get the project started, right? All of our funds are going to be released in a reimbursement style fashion. That's just to make sure that the funds that we have lent you for this project are actually going to the project. And so we do have a very streamlined construction draw process. So what's going to happen is you're going to be assigned to a funds control analyst who is going to be your, draw liaison, not only for this project, but every project in the future. So you're really going to build a team within Marshall Reddick. You're going to build a relationship with myself or Vince. You're going to build a relationship with your investment analyst and then also your funds control analyst. So we don't like, passing you on from person to person. We really want to take a personalized relational approach to our financing. And so, you'll work with the same people on every deal if you continue to borrow from us in the future. Once you're assigned to a funds control analyst, you're going to establish a draw schedule. So we're not going to tell you how to run your project. You're going to tell us how to run your project, and you're really going to, dive through your scope of work and your construction budget and tell us, hey, I'm going to do, the roof first, and then I'm going to do exterior paint, interior paint, and you'd really just walk us through exactly what you're going to do with the project. The big value add in working with us is that we have no formal draw inspection needed. So a lot of other lenders out there will hire a third party who goes to the property and, make sure that everything is done according to your plan. We don't require that. The only inspection that we require is if the county or city requires inspections, right? So in the event, you're doing a new construction project and the city requires that you pass the slab inspection before you continue moving on, we will require you to have that slab inspection passed before releasing the slab draw. But outside of that, we don't hire a third party inspector to go to the property. Everything's done with video or photographic evidence. So how do you submit a draw when you have one? You're going to gather your information, right? You're going to take that walkthrough video, start from the exterior, go through the interior, dialoguing what exactly has been done for that phase. And then you're going to be sent a draw form from your funds control analyst. And this essentially is just you listing out the items that have been completed, and then also what percentage of, completion you are with the project. After that, your funds control analyst will review, and then they'll essentially send to the lender for final approval. You'll typically receive your funds within 3 to 5 days. A lot of times it happens quicker. Again, we're transparent. We don't like to bait and switch. We don't like to overpromise. And so while we do say 3 to 5 days, in a lot of instances, it does happen quicker.
Yeah. So I know for now, if there's some questions out there that are have been unanswered, we do have some frequently asked questions that might be helpful. So I'll go ahead and work through some of those. Can I do more than one loan with Marshall Reddick at a time?
Absolutely. Yep. We have borrowers that, have 2 to 3 projects with us at any given time. And then we also have borrowers that, have 10 projects with us at any time. Of course, it, takes time for us to get there. It's a relational thing. And, we have to prove ourselves to the borrower to make sure that they know that we're going to get their deal done on time. But then they also have to prove to us that they can get their projects done. And so you can absolutely do more than one project at a time with Marshall Reddick, or more than one loan rather. And we typically will start with, 2 or 3 and see how things progress from there.
Nice. Yeah, that's helpful. So I want to keep my fix and flip as a rental. Can Marshall Reddick help me refinance?
Absolutely, yeah. So we can help you refinance either on a 3 or 5 year bridge loan, which you went over earlier. Otherwise, we do have a DSCR program. We don't do as many of those loans. We actually don't use, that's the only program we don't use our capital to fund those loans. So it's a little bit more in depth of a process, but nonetheless, if you do need outside of a 3 to 5 year bridge loan to refinance, we can help with a 30-year fixed DSCR loan. So absolutely, we can help.
Does Marshall Reddick work with loan brokers?
Absolutely. We work with loan brokers every day. So if you're a loan broker and, have a deal to run by us from one of your borrowers, please send it over. Ultra quick response times, right? Like if a broker sends over a deal within the hour, most of the time we're getting terms over, or a loan quote, I should say, over to you as the broker. So we're also happy to facilitate the transaction however you want. So whether that's, you make the introduction to the borrower and we do all the communication with you copied, whether you do all of the communication with the borrower and just, operate as the liaison, we're more than happy to work with loan brokers.
And I get this question a lot in real estate, but does Marshall Reddick have a referral program?
Absolutely. Yep. We do have a referral program. If you have, colleagues or friends or families or, whoever it might be out in the space who are looking for, fix and flip, new construction bridge loans, we're more than happy to pay you a referral fee. And so feel free to give Vince or myself a call and we're happy to discuss.
This is always a good question, but where does Marshall Reddick get the money to originate these loans?
Absolutely. That's a question we get all the time. So we fund our loans in one of two ways. We have direct capital partners, so people like Vince Tomich, Stephanie Miller, who, have $100,000 to invest, let's say, and they want to, they see a mortgage on our website that they want to invest in. They can personally invest their money into a mortgage. Alternatively, we also have a mortgage fund. So that is a pool of capital, if you will, that investors invest in, and we use that money then to fund our fix and flip new construction bridge loans. Yep. So both Vince and I have been mortgage investors as well as the Marshall Reddick Mortgage Fund investors, and so if anyone has questions about how to get involved in that, we're happy to answer as well.
Absolutely. Thank you guys all so much for joining us tonight. I just want to share our contact one more time. Again, I'm Vince Tomich. And then this is going to be Stephanie Miller's contact. So for those of you that do have any questions moving forward or any interest, feel free to reach out to our contact. We will be doing some follow-up this week, and we appreciate you guys joining us tonight.
Yeah, thanks so much, and hope everyone has an awesome night. Thanks, Vince.
Thank you.